Hi, ladies and gentlemen. One more time, this is Rock Forcing TV, and I'm your man, Rocky, and behind the camera is Eli K. Forcing. Today, we are here to talk about real estate. If somebody wants to buy a house or a home for the first time, and I have two amazing ladies here who are going to join me in this discussion. They are experts in their own fields, so before I introduce them, I have Millicent here, and she will give you her full name and what she does. And I have Brenda also here, and then she will also tell us what she does, and she will give you her full name. Now, let's go to Millicent, please. Welcome to the program.
Thank you. My name is Millicent Oswentwi. I am a realtor in the Valley.
Okay.
I have been practicing for, this is my 20th year. Wow. That's very special to me. And I have a passion to help first-time buyers especially, and all the other buyers as well, to find a property, because I believe every individual builds wealth through owning property. So that's my passion. I'm with HomeSmart, and I'm here visiting with you.
Okay.
Yes.
Now, that's Millicent. We have there Millicent Owusu. So now let's go to Brenda right here. Brenda, welcome to the program. This is Rock Forcing TV.
Thank you.
Yes. Can you tell us a little bit? Yes. Can you tell us a little bit about yourself, what you do? And I know you are expert in your field too.
Thank you so much. I do have a little bit of a history. My name is Brenda Procco, and I am a senior loan officer with Barrett Financial Group, and I work as a wholesale lender to bring my customers the lowest closing cost and lowest interest rates available in the market, which is very important for the long-term for your long-term payments, and to be able to pay off your homes quicker. You always want to have a lower interest rate. But my passion is to help anybody that comes or contacts me to help point them in the right direction and show them how they need to get qualified to be able to purchase a home.
Okay, with that said, now let's go to the main point. So please, I'll go to Millicent. Now, if I am a first-time buyer, somebody who wants to buy the house for the first time, always people's first place of visit will be the internet. They go there, they Google, they find out houses, and then it brings out their excitement. Ooh, wow, this house is nice. Oh, this is how much I'm going to pay. Sometimes it's true, sometimes it's not true. Now, can you tell us something about the kind of real estate you do, and then if somebody is a first-time buyer and they contact you, what other things that you do to help them?
Thank you. So, I represent buyers and I represent sellers. Depending on your need, it guides me as to how to help you. And when someone comes to me for the first time, I sit with them and get to know them a little bit, because I need to know what their hot buttons are, and by that I mean which areas are important to them. Sometimes the school district is very important to the buyers. Sometimes it's their job location. So we sit down and get to know them a little bit, and that way they also get to know me and be comfortable with me, because they will be sharing a lot of information with me as to how much they want to purchase, location, and other things. So that's the first thing I do with them. And one very important thing that I bring up, after I've met them and talked to them, is I ask them if they have talked to a lender, right? Because you want to know how much you qualify for. Now, when I'm stepping back a bit, when it's a buyer who wants to purchase a property to live in, a home, I know which kinds of properties or which areas to guide them to. It could be a buyer who wants to purchase a commercial property. That is also a special buyer. and it could be a seller who wants to list their property or list their land or a commercial property, and that is also a whole new area. But I guide them to a lender and explain why it's important to talk to the lender and find out how much they qualify for and what their buying power is. Now, I serve the greater Phoenix metro area. I go to the East Valley or the West Valley. I do Casa Grande. I even have worked in Tucson, though I would refer more out, since I believe that you need to know the market that you are servicing very well. I have some agents that I've worked with in Tucson. I would guide them too. So from the West Valley through East Valley, I service clients in all these areas. So number one is we talk to a lender to find out their buying power.
That is very important, to talk to a lender. Fortunately, we have Brenda here, who is a senior financial, loan officer. So I think finance, she might be able to tell us more about the lender's duties. So Brenda, are you one of you represent lenders, right?
I'm one what?
Like you represent lenders, like, yes. So if in case, let's take it that I went to the realtor and the realtor said she refers you to a lender. Let's take it that I'm referred to you. What is my first point of information that I can get from you as a lender so that it will help me to set my mind on what I'm buying?
Okay, and it's very important to contact a lender in order to know how much you qualify for, if you qualify, how is your credit. There's numerous questions that I would like to, generally like to ask you, but most importantly, I start with the 2-year history. And the 2-year history includes where you've resided for the last 2 years. Have you been paying a rent or mortgage? If you're a first-time home buyer, you're looking for a home for your very first time. And it's just important to get to know you, to find out what's important to you. I also need to know your 2-year history for employment. Where have you worked for the past 2 years? It's important to have a steady 2-year history, just generally speaking. There's many other rules and requirements. We have thousands of pages of rules and requirements for each loan program, which we have an abundance of first-time homebuyer programs. Right now we have a 1% down program, but it's important for me to be able to analyze your income, to know also how much money do you have to work with. What are you comfortable with? What's a comfortable payment for you? How much have you currently been paying for rent? And then I would have to take a look at your debt to income ratio to make sure you're within guidelines, and then I can let you know how much you could qualify for, how much home you could qualify for based on the current interest rates.
Okay. So I have a question here. You made mention of some of the requirements include credit history, and you made mention of continuous 2 years of job, and then where the person has resided. Now, my concern is about the job. Now, before I come to the credit, I will ask you about credit, but let me ask you about the job. Should it be the same job continuously for 2 years, or can I have a job for a year, change to another job for maybe 6 months, and change to another job for the next 4 months, and that is 2 years? So could it be the same job, or can it be multiple jobs? Because some people are not consistent with maintaining the same job for 2 years.
Right. Well, and that's a very good question, because ideally it's nice to have a client that has a 2-year consistent history. It makes it a lot easier to qualify and determine their earnings. And there's so many variables. Are they hourly? Are they salaried? Has their employment history continue to improve. And they certainly can have multiple jobs during this time period. If they're hourly, we kind of have to take a 2-year history. If they've received bonuses, that requires a 2-year history. If they've worked overtime, it requires a 2-year history of bonus, overtime, and any other extra pay. Some are on a shift differential. Okay. And so we have to really dig in and look at their pay stubs, look at their W-2s, look at the type of employment that they've had, and you can change jobs. There's kind of a misnomer out there that you need to have the same job for 2 years in a row, but you are able to change jobs, and most importantly, if you have continued to improve and get a better job, then we can go off your current salary that you're earning. And I'd also like to add that if you are in college and you just graduated, say you just graduated with a nursing degree, and you want to purchase a home right now, and you just started your first job, I only need 1 paycheck. So we can use, excuse me, we can use their education also as part of the 2-year history.
This is something new. I'm just hearing this for the first time, because people have made it look like you're supposed to have 2 years, even if you're a new, first-time buyer or so. So many people have the conscience that somebody right from college cannot buy a house, but now you are just giving us a new information. So before I go, before I come back to Millicent, let me ask you this question about credit. Because you mentioned it. You mentioned 2 years of residency. Mm-hmm. My past place where I lived, whether I rent or and then you mentioned about 2 years of jobs, and then now I'm concerned about the credit. What kind of credit do I need? Good, bad, average, excellent?
All of the above, actually, are acceptable.
Okay.
The excellent
is the best.
Credit is the best, okay. Because if you have excellent credit, you're going to get the lowest interest rate and typically the best programs. There are some exceptions to that, but I won't go into the details of that. You can actually have credit scores below 620 and even into the 500s and still qualify, depending on your overall credit profile and your job history. That type of client would go into a particular loan called a government loan, like an FHA loan or even a VA loan, and they'd still have to qualify through an automated program. So all hope isn't lost for clients with super low credit, although the odds of them qualifying would be lower unless they had a lot of money to put down. Okay. Then that would kind of mitigate the risk of them having lower credit. So good credit is anybody with a credit score, I would say 640 and above. You can still qualify for a good program with 620. You can still qualify for a conventional loan. Okay. Now a conventional loan and FHA loan, they have 2 completely different sets of guidelines. You can have a higher debt with an FHA loan than a conventional loan. Conventional loan is typically a better loan because you don't have as many fees like you do with an FHA loan. So the goal would be, and I like to try to advise and help anybody that contacts me on how to get your scores as high as possible. Because the higher your credit score throughout your entire life, the more money you save. The less you have to spend on anything that you, on any home or car or credit card, any debt that you have.
Okay. So the credit is good because it will determine how much you have to pay as a mortgage and how much you can put down as a down payment. Okay, now let me move on to Millicent. All these things she has looked at it, or the finance advisor or the loan officer has looked at all these things. Now I have to come back to you.
Yes.
because when I moved from the financial advisor's office, there's too much going on in my mind. So, because some terms are there that I might not understand, some terms are there that I might understand easily. So, and I'm still interested in buying. So I will come to you and then I will ask you simple question. From now, what is the next step? What do I have to do from now? Now that I've spoken with financial advisor, what do I have to do? What are the tips from here?
Thank you. So that's a very good stage that we've gotten to. And, as a way of easing into the question that you are asking me now, Brenda mentioned that, even if you have the 2 years, part of it is being in school,
okay.
It's counted. I have a story. A couple of years ago, I had an ASU student graduate, walk into my office, and 2 weeks after she graduated, and she told me she wanted to purchase a home. I actually laughed, and and I said, well, who told you that you can purchase a home? You just graduated. And she told me her pastor told her, before you purchase a car, purchase a home first. So we talked about it, and the short story is that she was able to purchase.
Okay.
So like Brenda mentioned, they used her time in school, and she was working. She was a hard-working lady, so she was able to purchase a home from walking out of school 2 weeks.
Okay.
So, and okay. Now coming to your question on at this point, what do we do next?
Yeah.
So, I find out from my client how much they qualify for, because I need a range to pull up homes for them. So let's say they talk to the lender, and the lender says they qualify for, let's say, 550, for a home maybe in Gilbert. And, we sit down and talk about the homes that we will be looking at.
Okay.
Now I want to set the expectation. So I tell them that I'm going to be pulling these homes for you, and I'll be sending them to you, on email. And in the comfort of their homes, they can see these properties. Now, I need them to look at the information and ask me any questions that they have. And it's going to, the information I'm sending to them is going to tell them the location, of course, the address. It's going to tell them the number of bedrooms, even the taxes on this property, the subdivision, what the amenities are. So they're going to see a lot. And I'm going to ask them to tag the homes that they are interested in, they would like to view. I set the expectation in terms of when they respond to me, how soon we can view the homes. Because I need to make sure that the agents who have the listing are aware that we will be viewing these properties.
Okay.
Sometimes there's an alarm on this home and I need the code from the agent.
Okay.
Sometimes the sellers live in the property and we need to alert them, so they set aside time and they are out of their home. Sometimes they have pets. So it's very important that I get the list of the homes at least 24 hours at least. And it would be nice if I have it for 2 or 3 days. So I'm able to schedule these homes for my clients, and then we step out and view. So generally, this is the direction that I take my clients once they've talked to a lender and they are aware that this is the price range we are looking at. I send them the homes and we set the appointments, and we step out and start viewing the properties.
Okay, all right. So if you need anything for now, you've seen your lender, you've spoken to them because you saw the need to buy a house, you spoke with your lender, and the lender gave you an advice. You came back to your realtor, and then your realtor also is sending these homes to you so that you can have a look at it. Now, you are deciding to buy. When Brenda was talking, she made mention of closing costs. So, because these are some of the terms that we need to understand. And I don't know why there's closing costs when I haven't even decided or I haven't even gotten the thing ready to set on. So I'm gonna go back to Brenda and ask her, what are some of these terms? Because I don't know if Millicent will also come in later. I've heard some terms like closing costs, escrow, and down payment and all that. So let's get a little explanation from them. So Brenda, what is a closing cost? I asked you about down payment. We know down payment is the money you put down. As for that one, we know. So unless you want to go a little further. So down payment, closing costs, and maybe escrow. If you can explain these terms to us, because some of these terms are like technical for layman to understand. So
Right.
please, can you
They're
take
newer.
it from the yes?
And there's a very long glossary of all kinds of different terms. But in escrow, starting with escrow, once you go under contract, Millicent would contact a title company, and they would open escrow, and that's when they would be required to put their down payment, or an escrow deposit, not their full down payment, an escrow deposit. So that starts at the title company. Well, then I contact the title company and I obtain title fees to know how much the cost will be as part of the loan cost. So the loan cost is a very general term that encompasses numerous different various costs. A lot of times when a client is getting pre-qualified, I like to give them an idea of how much their loan cost would be, so they'll be prepared for the amount of down payment plus loan cost. And then sometimes there's reserves that are required also, especially if you own multiple properties. But just sticking to the first-time home buyer, they have a choice on where they want their closing costs to be in terms of their interest rate. So just to kind of keep it simplified, there's an interest rate, and then you can pay points to buy down the rate if you choose to have a lower rate. And then we have a discussion on whether or not it's in their best interest to buy the rate down. Also, when they put an offer in, they can also ask for closing costs to be covered by the seller in some cases, or they can also obtain closing costs as a gift from a family member or friend or boss. Is another way that could help, because first-time home buyers, generally the number one issue they have is coming up with enough funds for closing. So just so you know, those options are allowed. And going back to closing cost, as a wholesale lender, I do not have any closing cost, which is one nice thing about being a wholesale lender versus retail. Unless they choose to buy points to pay their rate down to get a lower interest rate and a lower monthly payment. So then in addition to that, when you purchase a home, you're required to pay for an appraisal up front. Average cost of an appraisal is about $600. And so that is another part of your closing cost.
And what is the appraiser? Can you explain that term a little? Because these terms are new to some of these new first-time buyers, and we get confused. So
no worries. So generally speaking, every home requires an appraisal unless they receive an appraisal waiver, which is also common these days if you put quite a bit of money down or you're doing a refinance and you have a lot of equity in your home. You're not required to have an appraisal, but if you are required to have an appraisal, that is when an appraiser goes out to the home and inspects the home and writes up a report to determine how much the home is valued at, how much it's worth compared to other homes in similar neighborhood. So the lender will look at that, and that is the value that they will assign to the property. I mean, sometimes you could go in and maybe be willing to offer more for the home, and it's not worth that much. So the appraiser determines what the acceptable value of the home is by using other comparables.
all right, okay. So like I said, we mentioned down payment, and she spoke about it. Now she brought in the term appraiser, and then I asked her to explain the appraiser. And now I'm gonna go to Millicent for her to touch on the escrow, because I know Brenda said that her field is the one that write the escrow, right? So let's ask her about escrow, because she's the realtor now that we're going to deal with when we get this thing. So please, can you tell us a little about the escrow, and maybe if you can add more to the appraiser cost that Brenda made mention of?
Okay, thank you. So a lot of my clients, and rightly so, have no idea about appraisal, escrow, down payment, and they need some help breaking it down. And I look at the title company, that's the escrow, as I usually tell them this way. I tell them that you have two teams. You have the buyer and you have the seller, and then you have the referee, like in a soccer match or a football game. So the escrow company, that's the title company, is the middle ground or neutral ground, like a referee. Look at them like a referee, right? So buyer sends all the information to the title company, seller sends all the information to the title company. Your lender is communicating with them. We, the buyer or seller, are also communicating with them. So they are the middle ground, and they take care of the transaction. So that's where, so to break it down and make it, put it in simple terms, Brenda, right? So that's the middle ground, the escrow.
The escrow, okay.
Right.
That's the independent.
Affiliate.
Okay.
Good. So they are third party and they are independent to protect the consumer,
Exactly.
right? So that's what that title company
So they
is.
protect the consumer and the seller.
So the consumer being buyer or seller, they're in the middle ground,
Okay. So they
that takes
protect
care
both
of
them.
Yes.
Okay.
And they are not affiliated to the buyer or the seller or the lender.
Okay.
They are mostly a middle ground, independent ground.
Okay.
And when you also mentioned the appraisal, now I tell my clients, look at it this way. You want to purchase a property and you want a loan for it. Now you are going to go to someone for that loan. They need to make sure that the value of the home is worth what you are purchasing it for. Brenda, am I right?
Exactly.
So the appraisal is prepared so we know that yes, and you, the buyer, you also want to know, and even the seller, you want to know the value. You want an independent, third party independent, a party to validate that price.
Cost.
Yes, the value of the home, so that your lender will fund that loan.
Okay.
Now, Brenda, am I correct when I say that? So they want to know the value in it. That's why they conduct the appraisal, because you, the buyer, you don't want to give more money than the value of the home, and your lender is not going to fund it for more than the actual value.
Okay, let me come in and ask this question.
Yeah.
Does it mean that a house may be priced at, say, 500,000 from the seller's point of view after he or she has found somebody to do the appraisal, but when it comes to the buyer's point of view, when they also find somebody to do the appraisal, the 500 can come down to, say, 400? Is it possible?
That's an interesting question. I will share my perspective, and I believe Brenda will share that as well. So when I represent a seller,
okay,
if they will allow it, I recommend that we do an appraisal, because sellers look at their homes like a castle, a mansion.
Okay.
The buyer sees the home differently. So we have to price the home for the value of the property. Now, how are we able to determine the value? The market determines the price of the home. Okay. So the seller does not say, I want $1 million for something that is 800,000.
Okay.
It's the market. And how does the market tell us the value of the home? Now, one of the credentials I have is a price and service advisor, a PSA, and we are trained to value the home, right? To put together what the value is, and we use the market. We look at homes that have sold like this property. First, we like to stay as close to timing as possible. So we look at 3 months or 6 months, if necessary, a year. Now we want to look at the value of the home, what has sold in the subdivision. If we have to go out, we could do half a mile radius, or we could go a mile radius, or we can look at similar properties. So in the end, that is what will tell me as a realtor that this is the value of a home. So the realtor who is doing a good service for you should pull what we look at as comparable properties that have sold and use the comparable property to price it. Now, if the agent has done a good job, the listing agent has done a good job, the agent will look at the value of the home per the market. The market is influenced by demand and supply, square footage, location. So you have to look at all these things, right? And then you price it. Now the buyer could say, I don't want to pay so much for it, and might lowball it a little bit, right? And their agent is also supposed to show them comparable properties and set their expectation as to what the value is. Now, the bank, when they ask for the appraisal, is when they will validate the value of the home. Okay. So all these parties come together. You know, we can think we want so much. The buyer can say, well, I want a deal. But the appraisal is what validates. And what do they use? They use comparables. They look at the value, what is inside the property. Does it have a pool? When was it last updated? How the kitchen, how does it look like? The flooring, the general upkeep of the home. So they look at all these different areas to come up with a value, so that the consumer, the buyer, is protected, and the seller is also a consumer, and the seller is also protected, so that a seller's property is not sold for less than its value. Okay. So that is how I explain the appraisal to my clients, and I explain the middle ground, the escrow company, in simple terms.
Okay. Before I go to Brenda to ask her the next question, can the house value increase if the seller has put in different things? Like, say, when I bought my house, there was no pool. I saw that I have a big backyard and I made a pool. Can it increase the value of my house, or it will still remain the same without, if there was no pool?
That's a good question. We can look at a house that has a pool put in it as added value. So no longer is it a home comparable to other homes in the neighborhood without a pool. Now it has a pool, and the pool can cost how much? Depending on the pool you want, $40,000, $50,000. So there's added value to this home. So yes, the pool will add value to the home. Okay. If you have new finishing in your kitchen or in your bathrooms, you've updated your bathroom, you've updated your kitchen, countertops, cabinets, flooring, these add value to the home. So you can compare your home now with the added value to another home that has been updated, the price of it, so that it moves you from being a dated home to a home that's been updated, and then you can compare the values, and it will add value to your home, so it can sell higher.
Okay. Now, ladies and gentlemen, we've gone for a while. I don't think we can exhaust everything. So with that said, we will maybe come back and do a sequel of this. And then, but before we do the sequel, or before we decide whether we will come back, I want to ask them one question. Now, all these companies who selects them? And let me ask before I go to that. I know there's something called title company or title deeds or something. Who select all these companies? Is it the seller? Is it the buyer? Is it the financial company that is giving me the loan? Or who is in between doing all this organization for, so that the seller and the buyer will benefit?
Okay, if I may go
That's
first.
a good question, but that's a realtor question.
That's for her,
They
okay.
determine-
Yes.
Okay, all right, so go ahead, take
so
that.
that's an excellent question. For the title company, it is negotiable. If you happen to be purchasing with a new builder, the builder comes with a lot of cachet and clout, and they're a big company. So they also get affiliated with a title company. And so for a first-time buyer or a buyer purchasing a new home with a new builder, chances are they don't have a choice but to go with the builder's title company.
Okay.
Now, when a seller is listing their home, sometimes they have a preference to select a title company. However, the buyer makes an offer and can select they can also come in and select their title company. And we typically look at it as negotiable.
Okay.
So the buyer can select their title company. The seller is not supposed to mandate the buyer to use their title company. But there are situations when the seller will tie an incentive to using the seller's title company.
Okay.
Sometimes the seller contacts a title company and has them set up, the escrow to begin with, and also give maybe a reduced escrow fees to the buyer. So in a situation like that, the title company is negotiable. The buyer can select their own, and sometimes the seller can come in and say, would you use this title company, and receive maybe a reduction in the escrow fees.
Okay. All right.
I don't know if Brenda,
I don't know if Brenda want to
something.
add something, but before she add anything, I want to put this question to her. I want to ask her this question. It's very important, and I know it's very important to you, especially those of us who have bad or poor credit. Brenda, please, if I come to your office with a poor or bad credit, is it fixable? Can you fix it? Or do I have to fix it outside before I come to you? Whilst you add in whatever you can add to what Millicent said about, then you go on to my question, the credit.
That's a very broad question. But certainly I encourage customers that maybe don't think their credit is good to call me. And some think their credit's good, and they don't realize that maybe it isn't good because they haven't checked it. There's so many different ways to check your credit now as a consumer credit reports. They're not the same as the business-to-business report. Typically, those scores are higher. So a lot of times you can check your credit ahead of time and know whether or not it's good through consumer credit reports. There's a free annual credit report. There's credit reports that are available through your bank. Maybe you have a credit card. But certainly I recommend that somebody contacts me and we discuss their credit. We can even run their credit if they prefer. If they don't want a ding on their credit, we can do a soft pull credit that doesn't have any type of impact on your credit for too many inquiries. But I like to advise customers that are looking to purchase a home to have at least 3 open and active trade lines. And you need to start somewhere. If you don't have credit, it's good to go to your bank and get a secured credit card. You can ask your banker about that. So it's a way to get your credit started. But if you do have bad credit, then I can also advise how you can improve your credit score, because just because your credit score is low today doesn't mean that that you can't improve it. It's kind of like you're in college and you're taking courses. I always use that analogy. If you're in school, you're still adding to your GPA. If you're not in school, you're not adding to your GPA and trying to improve it, where you can always improve it. And you can improve your credit. It's really very simple to improve your credit by paying everything on time, by not allowing collections to occur on your credit. Especially I see this a lot when my customers come to me with medical collections. They just didn't follow up and realize that their insurance company did not pay for all these collections, or didn't pay for their entire bill, and they have ignored some of the bills coming to them. But they can simply contact the hospital or medical affiliate and pay us very small monthly bills. So my recommendation is to avoid having bad credit if possible by being responsible. So a lot of times clients will come to me and, you know, maybe they had an unfortunate circumstance. They were unemployed and they weren't able to make their payments on time. Well, that does impact your credit rather significantly. And you can then just kind of get back on the horse and ride again and make sure that you pay everything on time. But I'm certainly very happy to take a look at their credit, to discuss their circumstances or all their concerns, so that we can improve their credit scores. So it's not a life sentence that if your credit's not good now, that it won't be good. So you need to start chipping away at it to improve it.
Okay. Before we come to the close, I will see if on the credit, if maybe Millicent have something to add, just something simple.
Well, I know that is not my lane, and it is. I'm glad you have Brenda here, and she's a loan officer. She has given us a gist of it. But what I say to my clients, if you want to purchase, you have to step out and find out your financial health, your credit health. So talk to a lender. Don't feel like you haven't been very responsible and your credit score is low, so you can never buy. I say step out. It's very important that wherever you are at, step out and talk to the loan officer. Talk to them, because after your meeting, you're going to know, just like Brenda shared, that you want to be responsible, you want to follow up. Right? So I've had clients, I always have these stories. I've had clients that I've stuck with for maybe 6 months or even a year and over who have purchased. I had a couple moving to the state and they got pre-qualified. We wanted them to help them get a home, and it looked so bleak. The wife, looked at me and said, I don't think even within a year we can purchase. And I said, if you listen to your lender, within a year, you can purchase a home. And thank God, within a year to the time we had that conversation, they were moving into their new home. So my point is that wherever you are in your credit, go talk to the lender and let them give you the information. Sometimes we have situations where people, because of their religion, they don't buy into credit. I had a client once come to me and he had no credit card, and they did not want to subscribe to it because of their religious affiliation. Yes. And even with that, I said, still talk to the lender, because the lender was able to tell them, well, it's going to be tedious. We'll have to look at, your apartment, the payments that you've made. So Brenda always mentioned history. She will sit down with you and talk to you when you go to the lender and look at the history. Will point certain things out to you. You have these medical collections. You have to follow up. This is what you have to dispute this. So don't say you have poor credit or you have low credit so you will not make a move. It's important that you speak with the lender so you know the steps to take to be able to purchase.
Ladies and gentlemen, we have come to the end, almost to the end of the program. But before I go, I want to find out from these two amazing ladies how, if they may be contacted, how can we reach out to them in case you want to contact one of them. Maybe your credit is as bad as mine or it's as good as mine. If you want to contact them, because the both of them have just said that before you get diagnosed, either you are sick or healthy, you cannot say unless a doctor is involved. And both of them, I think one of them is a doctor on the credit. So please, step out there, let the lender check your credit, and they will be able to tell you whether your credit is healthy or is as sick as dead. So let's find out how we can get in touch with them, because both of them mentioned where they work, but we want to see how we can get in touch with them in case you want to get in touch with them either by phone or by email. And we're going to put whatever contact information they say on the screen so that you will be able to see. And if you want to pick it, you pick it and can contact them. I think your doors are open for anybody to contact you both, right?
Yes.
Okay, all right. So please, Brenda, can you tell us how somebody can contact you in case? Because there's much to talk about. I even wanted to ask about, they say, don't change a job. You cannot change a job within, you cannot buy anything big, huge. All these questions people want to know, but we can't do all this within the short time that we have. Maybe next time we come back, we will be asking all these questions. So in case somebody want to contact you before the next interview or the next sitting, how can they contact you?
They can simply contact me on my phone, whichever means they're comfortable with. You're always welcome to call me on my cell phone, is always the best number to reach me at. You can send me a text. We can determine a good time to speak. I can also meet with you in person at my office, or you're welcome to send me an email. So should I give them my phone number? My cell phone number is 602-228-4490. And my email address is brenda@barrettfinancial.com, and that's spelled Brenda, B-R-E-N-D-A, at Barrett, 2 R's, 2 T's, .com, B-A-R-R-E-T-T. Thank you, and I will look forward to hearing from you. Please don't hesitate. I know a lot of people that don't have good credit or are uncertain are afraid to make the next step. And so it's just good to find out. And I'm looking forward to pointing you in the right direction if you're not already pre-qualified.
Thank you. And like I said, you see her contact is what is on the screen now. So you can please copy that and send her anything you want to send her. Now, before let me go to Millicent. Please, can you tell us how somebody can contact you, either by phone, email, or any other means, please? Can you just put it out there?
Thank you. So you may contact me by phone, by email. You could text me. We could meet in person. I'm even on WhatsApp. If you want to reach me, I've had clients, we've had transactions where it's been strictly on WhatsApp. My phone number is 480-516-4309. And my email address is simply millicent.agent@gmail.com. I'm with HomeSmart, and you can contact me at any time. I look forward to being of service to you. Thank you.
Thank you, ladies, for the help that you have given to our community. We know that you have eased a lot of, issues that other people have concerning buying a home, first-time buyers and all that. But please, I will ask you on behalf of our audience, make time so that we can do another interview. This is just something that I'm putting across for our audience, so that in case somebody asks questions, we will be able to move from there. And then if nobody asks questions, we'll be able to move into the next level as to how they can get and move to their new homes without any hassle or any problem. So please, on this note, we thank our producer, Eli K. Forson, who is also our cameraman. He is always hiding behind the camera. And we say thank you, Mr. Forson. And we are at the Barrett Financial Groups of Companies building, and we say sincerely, we thank them for giving us this nice, amazing hall to use for this interview. Thank you very much, and see you next time. Please keep watching and keep sharing, and make sure you contact them, and make sure you comment also. Let us know what you are thinking and what you want them to talk about next time. God bless you, stay blessed, and don't spoil your credit. See you next time.